SMC is a very broad topic. Okay, sorry about that. SMC is a very broad topic, and it being a very broad topic, you understand that we meet things such as order blocks, gaps, we meet say sana supply, sana demand. We need to incorporate them with Fibonacci's and all. So you get to a point whereby you get confused. Kuti, all right, I'm trading, but how should I really trade? Ndavura charts like this, where should I start from? And it. So today I'm going to be showing you the entry models from where you start paunovhura charts ako to where you end. And it. So the first thing that we want to do when we open our charts, personally myself, I move to H4, right? I move to H4, right? So when I move to H4, generally what I'm doing in my H4 is I'm looking at the overall market direction. Where is my market going? And what's the structure looking like in my market? So let's take it for example. We have this gold that we have over here. I know gold is not moving currently because we are now on weekend. And today I choose to use currency pairs because I'm always using my examples. Emma, what do you call this? I'm always using my examples. Emma pairs, like my volatilities, world trade, and the right. So overall, what I'm seeing is I've been in an uptrend. And how do I tell that I've been in an uptrend? You can actually see that I've been having these lows. Sorry, let me mark them. I've been having these lows and highs that were trending above my price, breaking previous highs and breaking previous lows. And so the first question that comes to my mind is, where is this trade going? And where is this trade going? Where is it going to end? This is the time where I come to my left and I look for previous data. Let me do this. And I look for previous data. And so my previous data is the most recent one. What price did and on my left. And if I'm to take something like, let me do this. If I'm to take something that I'm gonna put like a border, what you're going to see is I'm going to split this into two. So this is where my price on my right is where my price started moving up, and then on my left is where price was reacting before. Now, my question at this point is, all right, since my price is going up, where is this uptrend going to end? What is on my left side that determines that, you know what, price might just reach here and stop? Already, I can see that I have a gap. I think you can all see it. All right. Already, I can see that I have a gap over here. Which price is most likely going to come and tap into? What I'm also going to see is I have a supply here. I think we can also see a supply here. Sorry. My 2 is a bit hesitant there. That's what it does sometimes. I don't know why. Right. I have a supply there. And just below that supply, I have another supply there. And I have another supply there. But then again, we have another point of supply that price is currently at. So whatever that I'm doing, I'm knowing that, all right, this whole area, this supply, this gap, this supply is where my price is most likely going to reverse and then go down. Now I have an overview. And it's in the H4. What do? I go into my H2. When I go to my H2, what I'm basically trying to see is this is mid time frame structure between higher time frames and lower time frames. I'm transitioning from a higher time frame now going to a lower time frame. And as I'm doing that, I need to understand some things. I am overall still in an uptrend, and I need to be looking for what we call my buy opportunities. Right, there's two things that a trader can do. A trader can enter a sale here and make profit. A trader can enter a buy here but still lose. But at the same time, we will still be in an uptrending market. So you can get the right direction as a trader, but you can still lose. Why? Because your entry is what matters more when you are a trader. That's why you see, that's why you see when you enter some trades at some time, they look like waluza a trade, but the overall direction is still the same. It's because nokakanganisa entry. Right. Knowing that I'm in an upward market or I'm still in a bullish market, I haven't confirmed that I'm in a bearish market as of yet. The way that I now take things is okay, I'm now in my H2, and in my H2, this is my low here, and this is my high here. And if my low gets violated, then I know that, oh, okay, this is a change of character, and most probably my trade will sell. But remember, I have found my direction first, and I have marked where I'm expecting my trade to end or to be at. I want to complete that reversal and then go down. Now, we want to combine everything that I told you before. When we are in an uptrending market, we expect to see structures like flags. And I think we can all see we have a flag here. And this flag, even though, let's say I didn't trade from this flag, it's going to become one of the strong factors to tell me that I still have to continue in an uptrend. And from the way that I taught you how to trade a flag, I said, if you are trading a flag, this is how I combine my own analysis. So I want you to listen to these guys because this is going to be very helpful for you in the future. How I taught you to trade a flag, I taught you that you come and you do what? You come and let me do this. And you measure your distance from your low to your high. And that's the same distance. Let me do this. That's the same distance that you're going to have a take profit at. So let me take this flag again. That's the same distance that you're going to take this flag from and say this is going to be your TP. Why am I doing all this? I'm doing all this so that I really know where my trade is going to reverse for the long run. I'm not willing to trade this trade. Zvokuti, it's just a short trade at the end of the day. I want to trade it for the long run. So now that I've seen this, what I do is I come and I mark. Let me do this. I want a line that can kind of come and mark like this horizontal line. Okay. Sorry, let me grab it again and put it here. Oh, I don't know why it's not showing, but let me check. Let me take another one. Sorry, I don't know why my line is not marking there. Let me do this. For questions, I'll call you guys. I'll let you answer questions. Please, can we just listen to this at first? So I don't know why my line is not marking there, but well, let me just choose this price point and let me put a box here. So I'm expecting my price. Okay. There's someone who's who's requesting. You keep on raising your hand. I've asked you to unmute. Classic.
Yes, I wanted to say you can switch off the magnet right there on your left. It's the one that's causing
Oh, okay, okay,
lines
okay.
not
Sorry,
to
sorry. I hadn't noticed. Thank you for that. Thank you a lot. Thank you for that. So what I would do is I would come and then I would mark my line, right? And let me remove all this. Thank you for that. Thank you. Had I ignored you, we would have been struggling up to now. Now what I see is for this gold, at least I have to buy up to around these areas, right? Based from this flag over here, and it. So let's mark it properly again so that we know that we didn't mess up. Because one of the things that we would not want to do is to mess up, right? So let me take my line over here and then do this. Right, perfect. So this now leads me to say, all right, so if I'm buying, let me do this. If I'm buying, gold is actually going to buy up to somewhere around this area. Although there's potential that it will come to this, I'm also taking this factor based off from this flag over here. Right? I didn't want to mention the flag item, but well, it's just part of the analysis that we do, and those are some of the factors that we need to consider, right? But then now let's go to the actual point. So having having to now know that I've mastered my direction and knowing that I'm in a buy trend, what I need to do here is I need to get in an entry, and most probably this entry has to align with my structure. And my structure is telling me that I'm in a buy. So what I do is I box this area over here. So let me go take my box and let me show you. Sorry about that. Right, where's my box? All right. So I touch my low and I touch my eye like this. So what I'm meaning to say here is if we are to buy, so let me mark 50% of here because we just want to put everything together so that we all see. If, okay, let me put it. Yeah, thank you for your patience, guys. Right. So if we are to buy not just this pair that we have here, but any other pair that we are going to see or to encounter as we trade, we are not going to buy it from this level, which is our premium level. We are going to buy it from this level, which is our discount. The reason why I chose to do gold today is on Monday we are opening markets. So I want us to do something Chekuti, we can actually go and say we did together and then we actually see it play out. Now, what we do is we now know that we have a premium and a discount. And I want you to look at this. These are things that you should factor in. When price moved from this area over here, it moved vigorously so much that it left us with this whole gap over here. What does this mean? What's the existence of this? According to what we've learned, there is a strong demand zone that we have over here. As we have that strong demand zone over there, if we look to our left, is this demand zone responsible for the break of a previous supply zone? Yes, it is. Where here? Is it responsible for the break of a previous order block? Yes, it is. Where here on my left side, where I'm marking there. And it. So what you see is if we focus on the left side, where the high is here, where the high is, where the high, that we're breaking the previous structure and going low. But then as soon as price was injected in the market, This is a perfect example of where an institution played. It just shot right straight up with this huge gap. And mind you, we are in 2 hour H2 time frame. So somewhere, somehow, we have a strong demand zone over here. So what do we do at this point? At this point, since we are now seeing that we are in H2, there is no order block over here that we see. There's no order block over here that we see. There's no order block over here that we see. So on this analysis, we wouldn't really want to say we want to focus more on order blocks. Even if we come and we say we take our fib, we wouldn't really want to say we focus on that. Why? Because this is enough evidence that we had a strong demand zone. So now we move from our H2 and we want to find an entry in this discount level. If you buy here in the premium price, this is what now price can do. Like I said, I'm teaching you the whole SMC entry model and it. This is what price can do. Price can come and confuse you and act like yaguma 50 isina uchinyatsoona kuti haina, and then it comes again, and then it acts like it reacted again and then go up. What it leaves you here is it leaves you with my double bottoms. Basically, this is inducement. You are being induced into thinking that when price comes again, you make triple bottoms and then price will go up. But generally, what it's doing is it will come, then there is tons of stop losses here. Takupinda ma liquidity concepts anditi. And then when it comes and sweeps all that liquidity and then it goes up. Remember, for price to go up, it needs something that fuels it up. So, like for example, here, I already know that we have a demand zone here, which fueled up this whole buy and it. But then, when it bought and it, price yakatanga kuneta, it starts dragging a bit. Why? Because now there's no more buyers, or there's no huge number of buyers within the market. Sellers start stepping in, and then what they do is they create my temporary. I want you to listen to this. They create my temporary supply zones. This is a temporary supply zone over here. And then price will come, play on it, respect it. Price will come, then give you double bottoms, then come, respect your demand, and then it shoots up. So be careful of double bottoms, triple bottoms, double tops, triple tops, and it. And most of all, don't ever buy in your premium zone if you are in an uptrend. Only aim for the discount zone. So let's go to our H1. Now, in our H1, you still see that price looks the same, and it. But I want you to look at this. At this area, price was not going anywhere. We had a fair balance of buyers and sellers. So what does it mean? It means if we come and we box this area over here, we will refine it, don't worry. This is now acting as our demand zone according to what I taught you about supply and demand. This is now what we call our demand zone. This whole zone over here. We had a balance of sellers and buyers. Sellers, buyers, and then buyers just chose to break out of that zone. This means that money was injected in this area. Now, someone would ask me, but Sekuda, why did you teach us the whole concept of using a Fibonacci? Right. Why did you teach us this whole concept of using a fib? Why are we not using a Fibonacci here? Why are we not using a Fibonacci here? I'm here to answer you. Why are we not using a Fibonacci here? I want you to look at this. If you come and buy from the 50, what is your Fibonacci really doing here? Even if we want to factor in that we have a gap, and it's not even filling half of that gap. If we come and we buy from the 61.8, it might try to make sense, but did it really fill that full gap? No. But if we fully fill the gap at the same time coming to tap in our demand zone, would it make sense or not? Yes, it makes sense. Why? Because we filled the gap at the same time we've come and tapped in our areas of demand, and then we continue going up. Trading is logical sometimes, guys. Sometimes you have to put logic in it so that it makes sense for you as well. So let me delete this fib so that it doesn't confuse whatever it is that we are doing at this point. So now that we are here, we've come from H4, we've gone to H2. We've come from H2, we've gone to H1. Let's go to M15. M15 and M30 for me, they are almost the same, Manditi. Why? I want you to look at this again. Even if you come to our M30, our structure is still gonna look the same. What about if you go to M15? Let's go to M15. Now, when we go to M15, things start to look a bit different. I think here's the evidence. We are doing it all together, TT1 and TT. So what I would do is I'd look for where price played around the most before it broke out, and then I would refine it to this area over here. So now what it means is I won't have to miss this gap that we have over here. Sometimes what people do, I want you to see this. Sometimes what people do is they would mark this tail over here, right? Because it is it stands as an evidence that price tried pushing, but then it was failing. So some people would mark their demand zone as much as to this tail. They look for if there is a tail that wigs out of that demand zone, and this is what they would term their demand zone. But at the same time, even if I don't mark that tail, what you would see is I'll still see the existence of a gap at this low over here. So meaning to say, on Monday, or on whatever that I'm willing to see my price come, fill this gap, tap in my demand, and then go up. Now, I have two strong factors to buy this gold. One, which is this gap that I see when I refine to my smaller entries. And two, which is this demand area. What you can see is when price was playing around on that demand, it short from it. Remember, a strong demand, it leaves gaps and it also breaks structure as we go. So where did it break structure? If we come to our left, what we can see is it came and it broke this high that I'm marking over here. This high that is here, which was broken by the move that emulated from this demand going up. But then, wouldn't it make sense to say, if you remember this lesson, I said, want to see price, break structure, come, give us a retracement, and then react, then go up. Isn't it the same if we are to say price, let me do this. Isn't it the same if we are to say, let me come here and delete all this noise. Isn't it the same if we say price came, gave us the break of that structure, retraced, and then short going up? So, what does it mean to say? It means to say, whenever we break structure, when we get a retracement, be it that we have a gap, be it that we have a demand, be it that we have an order block, price is to come retrace in those areas and then shoot up. I know someone has a question. Can you kindly ask me? We have 4 minutes remaining. I know someone has a question based from what I've said so far. Before I continue, can you please ask me? Someone raise your hand. All right, we've got many hands over here. Mr. J. Chikwanda, you can ask.
Thank you, sir.
You're welcome.
Hello, sir. Yes.
Yes.
Ndada kubvunza kase. Panyaya ye-order block ne-demand. Ndanzwa muchiti hatikwanisi kushandisa order block. Tofanira kushandisa demand. So how do I know kuti apa I must use an order block? Kana kuti apa I must use supply and demand? Ameno zvabva pandapandavhiringika mbichana.
All right. The reason why we said we are not using an order block, it was specifically for that analysis that I did. Why? Because if we are to check here, let me show you this. Let me go to H2. There's someone who's writing on the whiteboard. Please, you risk being removed from the session if you write. So I'm trying to get the zoom in button. Okay, here it is. Right. Mr. Chikwanda, you hear me right? There's a high here. There's a low here. Then there's a high here. In between this whole move, from our larger time frame, we cannot see any form of order block that we have here or order block that we have here. This was just a straight up move, meaning that this move was fueled by a demand zone that lies over here. So instead of us wasting time and putting a Fibonacci, let's say now I put a fib. Let me say I put a fib here. What it means is I'm going to struggle or I'm going to give myself more work saying which order block must I use here. Whereas there's no order block that we can see in between this higher time frame move. We can clearly see this was a move fueled by a demand zone. So either way, you know that you only have this OB that you have at the bottom here. Even if we now come and go to M30, let's choose that M30. There's no order block in between here. Those order blocks that you struggle looking for, they're just here at the bottom. Why? Because this whole move, it was just a straight up field move by a demand zone over here. I hope you are now understanding why I'm saying let's not focus on order blocks when our structure now looks like this, or when our move looks like this. Do you understand now? All right. Seems he's not responding. Anyways,